Right. Awesome. Hey, my name is Alex from Epsi, and we've been around for quite a while, and we've been sort of doing a bunch of things for software app developers, mostly within Shopify ecosystem. And for those of you who don't know, we are kind of providing funding to Shopify app developers. We're also kind of having something called Shopify Ads service, where we help India-based developers to run the Shopify ads smoothly despite all the payment challenges. And that kind of led us to this discussion today. So I've got Shashank and Mukesh today with me, kind of real sort of experts in their kind of fields of expertise, and I would love to draw upon their knowledge and understanding of what we're going to be talking about. And I'll let Shashank and Mukesh introduce themselves in a moment. So perhaps Shashank, if I can start with you.
Yeah, thanks, Alex, for a quick intro. Good afternoon, everyone. I'm Shashank. Some of you already know me. I'm founder of a Starapps studio. And at Starapps, we help more than 25,000 brands improve shopping experiences on their e-commerce stores. And I have been running cross-border businesses from India for almost 10 years now. So I hope some of those learnings that I'll be sharing today will be helpful in your journey as you expand your international operations. I'm glad to join with Alex and Mukesh. They both have helped and have been helping Starapps also in our journey. I hope some of you will be able to take advantage of that as well. Okay, thank you. Over to you, Mukesh.
Hey, hi. Hey, thanks, Alex, and thanks, Shashank. Hi, everyone. Myself, Mukesh, co-founder at M2K Advisors. I personally carry more than 17, 18 years of experience in the tax and regulatory domain. M2K was formed in 2014 with more than today about 125 plus team. We have an office in India, Singapore, US, Dubai, and Australia. We've been very fortunate enough to work with a lot of Shopify clients across bookkeeping, accounting, compliances, regulatory, structuring. We have also helped a couple of founders and Shopify companies in their M&A deals. Looking forward to share some of our experience in terms of the kind of the ongoing works and also how M&A is looked at, especially on the tax and regulatory of the SaaS payments and Shopify payments that we make. Looking forward to interact with you all.
Hey, good stuff. Thanks very much, guys. Perhaps without kind of further ado, let's kind of dive into, some of the questions, some of the themes that we'd like to kind of explore today. Well, Shashank, if you don't mind, let me just come to you and kind of ask you the question with regards to all this kind of issue, on the compliance and kind of the general kind of obviously friction that India-based developers are experiencing when trying to pay for the services abroad. I mean, why should you actually care about the compliance, and why should you sort of try and kind of, use those services that kind of would, make everything kind of work smoothly? Why wouldn't you just kind of go ahead and, use a friend of yours who's based out of the States to do this for you? Like, what is it all kind of about? Like, what do you think it's kind of important to be compliant?
Okay, so compliance is of course very much important to ensure that your business has longevity and you are prepared in advance about any challenges that may come in future. Because answering to any tax notice at the last moment and fixing things retrospectively is almost impossible. And that has much more cost than doing it as an ongoing concern. Asking a friend to help, I understand you were referring to using a friend's card for making international payments seamless, right? Because a lot of app developers do that, and probably that is fine when you are very, very young and just starting the business and you are still exploring whether the business has a viability. But once you have established that the business has a viability and you really want that business to scale, you have to start thinking about compliance. And asking a friend is using a friend's card for international payment. The problem starts from the very point, because you will not have any explanation for why you have paid that service, reimburse that friend for that service, because you have not received any invoice or any sort of receipt from them. And if you are doing that, let's say in case a friend is able to do it, they may not be aware of all the compliances that they have to do related to that in their country. And in all of that, you might be missing certain taxes, certain form filing, etc. So it's generally my learning has been that do it in the right way, consult a tax advisor, understand how it should be done properly, and use a channel use a proper banking channel as much as possible to do it. Yeah.
Yeah, thanks very much, Shashank. I think indeed, kind of, if you're looking to kind of future-proof your business and ultimately may consider selling it, to someone else, a few years down the line, you may as well kind of take good care of how you're doing your business, and remaining compliant is obviously essential, so you don't actually end up with any issues at the stage of somebody kind of looking into your business and kind of trying to understand whether it's been done, in accordance with the law and all the requirements that exist. Cool. Maybe just kind of worth mentioning to those of you who might not be kind of fully familiar with where kind of the whole kind of issue has come from. So a few years ago, our Reserve Bank of India came up with a new regulation which actually stipulated a few kind of additional requirements with regards to the card details, tokenization, as well as kind of additional verification sort of thresholds that need to be cleared before someone can actually make the payments. The issue is not just with the one-off payments, but also probably even more profound with the recurring payments. So you may be able to actually make the one-off payments, but at the next kind of point of this recurring billing, you would actually experience quite a bit of friction and may need to kind of enter, the password again, or like the OTP, or it may just kind of fail without you even knowing why it's actually failing. So perhaps I can ask Shashank you again, like what sort of kind of frictions, what sort of kind of issues, maybe if you can give us a few examples you've had in your practice, like what sort of services you struggle to pay for with India issued cards.
Okay. So I'll give you a couple of examples. As I told, I have been in this space for last 10 years, have been using different payment methods to make payments for services outside India. And it has been always challenging, and rules keep changing. One of the key reason previously used to be the OTP requirement in India. And now 2 years ago, when RBI asked every bank and all international parties to start tokenizing instead of storing the card data directly, I think that just changes the way the whole payment industry and the banking system was set up, right? And so some people have adapted to it. Some people have outright rejected doing that. For example, Shopify stopped taking payment for their Shopify ads, and they outright rejected that they will not accept Indian card, right? Thankfully, for other services, we have not seen as deep of a challenge as Shopify ads. But for example, there was another issue with Heroku payments. Heroku, any card that I had access to, and I had access to most of the card in India, none of the cards were working on the Heroku platform. Our servers were hosted over there. We somehow got a grace period of 2 months from them to continue operations. And nobody knew how we are going to pay for that. And in that, while we figured out that, okay, moving to Heroku could be a solution. And so we had to move to enterprise to solve that problem. So for each payment that is going out of India, it depends on the party that is accepting the payment, what sort of payment will work in that case, what will not work. But this whole change of regulation actually creates a challenge where uh, uh, being really sure that your business will continue to run becomes a challenge. One of the things that Indian government uh, proposed, I think last year, was TCS on payments through credit card. So a lot of people use credit card because ultimately that is, I think, the smoothest or credit card is probably the most accepted sort of payment method that works for international transactions. So some of the developers use it, but with the new direction in which Indian government is going with LRS and TCS compliances, etc., I'm sure credit card is the last piece into that, and they will come to it. And in that case, of course, one, it restricts the overall payment within 1 year to be not more than $250,000. It may create additional challenge where, again, compliance-wise, there might be issues because you are transferring those money under LRS, which had certain heads only certain defined reasons for which you can transfer that money, and whatever you are doing within the business may not be one of those reasons, right? So this is, for example, one of the upcoming challenge that I see for people who are using credit card. Fortunately, currently we are able to run all of our payments without credit card. Most of the debit cards are currently working. However, as I have seen this changing over time and all the compliances and the payment method issues because of RBI change of regulation, uh, we continue to explore more robust systems that can really future-proof our international transactions. And I'm glad you guys are working on to a solution. I hope that solution evolves over time and it can take care of just everything as if EPSI is our international partner for payments, right? So yeah.
Cool. Yeah. Thanks, Shashank. Very, very helpful kind of observations and, some of the good examples of, where people are experiencing problems with the payments. Mukesh, if you don't mind, I'd love to actually come to you and perhaps kind of give you the first difficult question, at least kind of difficult from our perspective, on, the legal and tax requirements for foreign payments. What is kind of GST as well as any kind of similar tax obligations that software developers actually need to consider when kind of making those payments for various kind of SaaS services? If you can maybe kind of elaborate on that bit a bit more, that would be helpful.
Sure, Alex. So whenever any Shopify companies makes payment to foreign vendors for either for Shopify or SaaS payments or any kind of software that we procure or any services that we use for any foreign vendors, right? There are 2, 3 important things that we need to look at it. The first thing, the most important, is looking at withholding tax. Whenever we make payment to any foreign parties, we need to look at whether that payment is subject to withholding tax in India. And today in India, most of the services, most of the foreign payments that we make is getting subject to withholding tax under the domestic tax law. Under the income tax, there are 2 principles. One is we look at the domestic tax law of the respective act, which is Indian Income Tax Act. And then we can also go through the tax treaty between the India and the whichever country to whom we make the payment. For example, if we make a vendor payment in US, then we can access the India-US treaty. But under the domestic tax law, the definitions are very wide, be it the professional service or be it the royalty payments are very wide to cover any kind of payment, including a basic software that you procure like Microsoft software or Slack payments gets covered under the typical royalty definition. Same way, any payment that you make for any services that you use, and even those gets covered, whether or not these services are being performed in India. So if there is a foreign party who renders the service from foreign and you have to make payment from India, even then those things gets covered under domestic tax law. The next important thing needs to be looked at is typically the tax rate is 20% plus surcharge and cess. So it can range from anything between 21 to 23% on any foreign payments that we make. The most important thing that happens thereafter is, assuming you make payments to vendors like, let's say, Slack, and you have to pay, let's say, per user $100 per month, which means if you have to make the payment, and if you go for a normal withholding of tax, then you need to make $100. Let's say the tax rate is 21. Then you need to make payment of $79 to the other party. But typically, those foreign vendors would not agree for a withholding tax, which means you need to gross up the tax and make the payment to the other party net of tax, which means your cost of the services or the Shopify payments or any other payments, it's not the $100, but $100 plus the taxes, which means your cost increases by at least 24-25% when you gross it up, right? So then the most important thing that we need to typically look at is, if you look at most of the treaties with which India has entered into, the tax rate is either not applicable, or the rates are lower than the domestic tax law. For example, if you look at payments to any US vendor, these softwares are not typically taxable in India unless there is a copyright being shared to you. And most of the software that you use, they are only a copyrighted article. You don't actually have a right to check the code or amend the code, etc., which means those payments typically do not fall under either the royalty and etc. And same way, on a services also, there are narrower definition by which you can explore non-requirement on any withholding tax. But to claim any treaty benefit with any foreign vendors, there are certain documentation that needs to be obtained. The documentation are simple. You need to get the tax residency certificate from the other vendor to prove that he is a resident of US or he is a resident of UK or any country. And then you need to get the necessary Form 10F and other declaration that he does not have any office or business in India and etc. Sorry if I'm going a little technical, but just to make sure you understand a little bit. So any vendor payment that we make, we need to collect certain documentation and look at whether that treaty has a better wordings or a lower tax rate. Then in that case, you can access those lower rates or lower benefits and go as per the treaty. But if you don't get these documents, then you are stuck under the domestic tax law, which means you need to withhold tax at the rate prescribed under the domestic tax law, which could be 20 to 23%. And if the other party do not agree for withholding of taxes, then you need to pay from your pocket, and it becomes an additional cost to you. That's one of the important requirement. Secondly, even though you are doing all the withholding tax, or whether you access the treaty and where there is no withholding tax required, even then you need to do certain compliances. There are certain forms like Form 15CA, Form 15CB that needs to be filed with the tax authority, without which you cannot make payment. So if you typically route your payment through a normal banking channel, the banker will not process any payment without this form being filed. So the most crucial aspect is then these compliances. And this is more on the income tax side of it. And if you do not comply with some of these provisions, there could be certain consequence. For example, if you don't withhold tax on any foreign payments, then these expenditure are not deductible for tax purposes when you compute your tax liability in India. Secondly, you might be subject to interest and penalty if tomorrow tax authority comes back with any notices with these demands. And if you do not file in Form 15 CACB, there are penalties for every form that you don't file. The maximum penalty could be 1 lakh or the amount of transaction value, whichever is lower. This is broadly from an income tax standpoint that we typically look into. Coming to the GST angle, typically any foreign payment made to any foreign vendors for any services or software are subject to GST on a reverse charge basis. Generally, it is the service provider which charges GST, but there is an exception where an Indian provider receives service from any foreign vendor, because it's difficult for the government to collect GST from the foreign vendor. So the onus is put on the Indian party. So whenever an Indian party receives any service from a foreign vendor, they need to charge GST on 18% generally on a reverse charge basis. But only thing is, it doesn't become a cost to you. You can claim input tax credit for that particular payment and offset against your output liability. For example, if you receive service and you also further render the services to your customers, you anyway levy GST on that. You can use this credit to offset against that payment. However, if your typically business is do 100% export, or majority of the business is export, then whatever GST credit that gets accumulated, including this reverse charge payment, you can probably claim GST refund on a periodical basis. Therefore, GST is not a cost per se, but it could become a cash flow challenge where you need to pay upfront and then look for claiming a refund at a later stage. So these are the couple of broad principles that I look at from a tax standpoint. if from a regulatory and other standpoint, we'll touch upon in the subsequent questions. Yeah.
Cool. Yeah, that's really helpful. Thanks very much, Mukesh. And maybe if we can kind of come to you again with another question, with another aspect, which relates to the Foreign Exchange Management Act. So essentially, how does that sort of requirements in terms of sort of dealing with the foreign exchange affect the Shopify app developers and any other kind of developers for that matter when they're kind of transacting internationally? If you maybe can touch upon that bit, that would be also kind of helpful.
Sure, Alex. So now coming to, beyond tax, there are another important law that generally is missed out by most of the, the Shopify partner that we have worked with or any accountants is that exchange control law. In fact, we always give more importance to an exchange control law than even the tax law because the consequence could be much more challenging aspect. So under any thumb rule is that whenever you make payment to any foreign vendors, or you deal with any foreign exchange, one of the important law that gets applicable is called Foreign Exchange Management Act, which requires certain important things that needs to be done. There also the principle is split into regular current account transaction. When I mean the current account, I mean typical export and import of goods and services. That falls under the normal current account transaction. And then there is a capital account transaction, which is basically whenever I buy shares, sell share, buy properties, and etc. We are not dealing with the second aspect, which is a very different and it's a subject in itself, specifically focusing on the ongoing transaction. Whenever we make payments to foreign vendors or we collect money from Shopify, then this import and export conditions gets applicable to us. There are basic criteria that whenever you make any payment to any vendor, you need to make sure that you collect all the basic documents from them, and you need to make payment within 6 months from the date of receipt of invoice. Beyond 6 months, you need to take an authorized dealer banker approval. Same way, whenever you render service to any customer or to Shopify, you need to collect the consideration within 9 months from the date of your rendering of service or from the date of your invoicing. There is additional requirement that comes from the RBI is that you need to typically get the soft tax STPI as a non-STPI registration and do the soft tax filings. This is one of the other component which typically gets not focused upon because of the compliance cost could be very high at the initial stage. But I think once the companies have grown to a larger stage, people are taking up this particular compliance of soft tax filings. Another important thing that's a little gray area today is that typically in a Shopify world, Shopify makes the payment after adjusting its commission. The commission for initial Shopify companies could be 2 to 3%, but once you cross a particular threshold, if I am not wrong, it's $1 million, then they typically charge 10 to 15% of commission. And typically Shopify, what it does is whatever collection it does, it adjusts its commission and makes the net payment to the Shopify partners here, which is that 85 or $90. The question therefore that comes is, is this netting off? Because normally the law says under exchange control law is that you need to realize your money fully and you need to separately make payment, there. You cannot net it off. So in this particular situation, the question comes is, should I need to receive 100 and separately make this, $13 or $15 payout to Shopify separately? Or is this a net revenue is what my net revenue is? Some of the Shopify partners take a view that it's a revenue share. So what comes to me is only the net revenue, which is that 85 or $90 and not the 100. And therefore, I don't need to look at the exchange control law, go to AD banker, take an approval. Because one of the important challenges, this netting off also is permitted only on a certain situation by the AD banker. If it's not covered under the selected criteria, then you need to go to RBI. It becomes very, very difficult. And within the AD banker, the powers are only to set off between service to service. For example, if I render service and you render service to me, then that netting off, I can go to AD banker and take an approval. But if it's a service and other party is rendering me software, then the AD banker saying, I cannot approve, you need to go to RBI. And we have seen practically that in a Shopify ecosystem, they say that what Shopify partner does in India is more for software, whereas the Shopify as such is only rendering service. So it becomes software and a service payment, which you can't net it off under authorized dealer banker approval, which means you need to go to RBI. And that's why most of the companies are taking a view that it's what I get is only the net revenue, and that's my revenue that I need to account and pay taxes for. So this is a little gray area here, but these are some of the intricacies as far as exchange control law is concerned.
No, thanks very much, Mukesh. And I guess, some of you noticed that, a couple of days ago, Shopify updated its T's and C's, with regards to Shopify theme developments. And I think that no longer kind of should provide a subsidy, which used to be in place for the theme developments if it's kind of been posted an official Shopify theme store. So it's essentially revenue share from kind of ground zero. And you never know, that may kind of also happen to kind of existing kind of arrangement with Shopify app developers as well. And therefore, you would kind of need to automatically apply the logic of actually grossing up, because you're going to be actually doing this kind of revenue share with Shopify. Shashank, if you don't mind me kind of coming to you and probably asking the question. So, Mukesh talked about, two big kind of components, one on the sort of tax side of it and the other one on the FX. It's a lot of information. It's quite a lot of complexity in terms of dealing with that, with all the reporting, with all their, kind of bits and pieces that you need to kind of gather in terms of their initial documentation. What is your kind of view from the practical perspective as somebody who's been kind of running the Shopify app development business for a long time? And also maybe if you can kind of divide your answer into kind of two parts. One, like, what would you advise for people who are at the early stage of their business, versus those people who've been probably kind of doing it for quite a while, and it might be kind of a different level of practical aspects they need to take into account. Thank you.
Okay. So say the right way is to as you already listened to Mukesh, there are just so many laws and multiple laws that we have to deal with in terms of compliance. And for any entrepreneur to know about all of that and filing that is impossible by their own. And most of the accountants also may not be experienced in all of these aspects, right? So working with someone like M2K, Mukesh, or anyone who really understands international transactions and who has probably dealt with business, a similar sort of businesses, a SaaS business, maybe, for example, someone who has multiple clients on Google App Store or any other. So M2K already works with multiple Shopify App Store, and that's why they have gone deep into the contract of between Shopify and Shopify partners, and so they understand all the nuances of it. So the ultimate solution is to work with someone who knows it really well, and there are again 3-4 directions in which you always have to think. It may seem very straightforward that a payment is, once you have just added a credit card and the payment has happened and that's it. But in most of the cases, that's not the end of the story. And I think that is what everyone needs to be aware of. Once you realize that and you start working with a professional, I think that is the best thing that you will do to your business for its longevity, and also in terms of any opportunity that comes in future for M&A. This really ensures that your compliances are in check and your due diligence can be done very smoothly, and the transaction can actually go through, right? So for people who are in the starting of the journey and who are still exploring if their business is viable, if the product that they are making are viable, I think pick certain easier ones in terms of compliances, and you can probably not think too much about adjusting, for example, FEMA requirements, Softex registration, etc. You can probably skip that at the early stage, as Mukesh also said. But for example, GST refund and charging, paying GST on a reverse charge basis for all the software that you are taking as a SaaS from foreign vendors. I think that you can start from day one. Those are easier ones. They are not cost. It's just a compliance and a cash flow overhead, but probably not too much to deal with. And generally, uh, initial at initial stage, your neighborhood accountant will be able to understand most of the part of it because they are dealing with GST in most of the cases. But as you grow, I think ensuring that your compliances with respect to FEMA, anything related to RBI, Softex, they are also added into the system. I think that's the way I would recommend someone.
Yeah, perfect. That's really helpful. Thanks very much, Shashank.
One more thing. I think what probably today we will not be able to cover this whole thing, and then for business to business and what are all their operations, where their teammates are, for example, located, and what other payments are involved. Based on that, everybody will have a different requirement. I think doing one-time consultation, at least with an expert, to understand what are all the things that they should be thinking in future about their business, and then grading all the compliances themselves into easier, mid-level, and difficult on different scale, and every entrepreneur will have to take their own call. What are the risks and compliance burden they want to add today? What are the compliances for which they feel the risk is so high that they would rather take the pain of compliance today and not delay it? While in some of the cases, they may just leave that for future as they scale up. So doing a one-time consultation just to understand what are all the items that needs to be taken care at a point, and then grading different compliances in different bucket for yourself, and probably go back to that list every 6 months and see if you are ready to take a few more.
Yeah, that makes a lot of sense to me. Yeah, thanks very much. And indeed, kind of would love to actually maybe do a follow-up kind of webinar and talk about, those things that you've mentioned, and maybe kind of try and reveal a bit more aspects of their kind of potential acquisition of the business that people may be kind of looking to sell in the future. Mukesh, if you don't mind me coming to you then with a question of accounting, right? We don't have that much time left, but it would be kind of helpful to understand, kind of the general consideration when it comes to the accounting for foreign payments. Like, what is the kind of the best practice when it comes to tracking and reporting those? If you can maybe spend a few minutes just explaining that in a nutshell, that would be super helpful.
Sure, Alex. So typically, in each of these Shopify payments, like example I said, right, the Shopify commission. Normally, you're required to record the revenue on a gross basis and the expense also on a gross basis, right? Assuming your normal revenue is $100, but net of commission you get 87, 85. Then what generally the tendency is that to record $85 the income. But the actual accounting law requires, because these are two independent transactions, your income is $100 whereas commission is 15. So normally you need to recognize gross versus net according to that. And generally, when you go for any exit, right, the valuation is typically pegged on the ARR value, which is on a gross basis. And if you recognize on a net basis, then your multiple or evaluation will be factored based on net basis. But that comes with one important challenge, which I spoke about, is the exchange control law. Is that if you recognize on a gross and if you receive from Shopify net of payment, then you come into another big challenge of, can you receive a payment on net basis without seeking the necessary AD banker or the RBI approval? That becomes a challenge. So some of the times to overcome or to manage all these laws, considering the GST, considering exchange control law, considering income tax, the practical stand which is taken by most of the Shopify partners, they recognize the net revenue so that they don't have the trouble of showing the netting off. Their argument is clearly that my revenue is only $85 and this is what the revenue share, and whatever $15 or $10 or $3 is made by Shopify, it's Shopify's income or revenue share. And in that case, I don't need to take an exchange control law and comply with the other aspect of the GST and income tax on withholding and etc. But from a valuation standpoint, whenever they kind of negotiate with the deal with the any buyer, that point in time, it is important that you explicitly say that your valuation is based on gross of any Shopify commission, even though you recognize in the books of accounts on a net basis. So to answer your question, there is no straight answer. I can be correct in accounting, but I may have challenge from exchange control law, or I may be correct in exchange control law, but may not be correct in the accounting as such. But looking at multiple laws and multiple things, the most practical solution is on a net revenue basis. But at the same time, whenever the deals and other things are happen, you probably give a insights to the to the consultant or the buyer well in advance so that you get the benefit of the real valuation.
Yeah,
So,
thanks, Mukesh. Sorry, go ahead, Shashank. Yeah.
so Alex, as I told you, for example, on the same point of gross or net, we had that debate for a very long time ourselves. And we consulted banks also and multiple banks and tried to figure out if they can really help us net off these two payments, right? Because once they approve, it is all fine. And I then try to understand the different aspects of it. If I'm taking a net path versus a gross path, what are the compliances and non-compliances that I am doing, and what are the risks of it? And this is what I think all entrepreneurs need to do, right? Ultimately, you will have to choose a path wherever there is a gray area, and then you have to decide for yourself whether that's worth it or not. So for certain compliances, we consider net payment, but for certain compliances, we consider gross payment, right? Because we also have to see the practicality of it. If no banker is ready, what can I do about it, right? However, in terms of GST, I know that whatever Shopify has deducted as a commission, I'm liable to pay a reverse charge GST. But because this is not a cost and I'm going to get that refunded after a few months, and this is just a cash flow issue, for GST purposes, we consider 100% of the amount, right? And we recognize Shopify's commission. So different laws, different places, you will have to make your own call. But yeah, I think just being aware that what are the items you are doing, and these things may not be really handy with everyday accountants. So somebody who is really, really expert into that area, I think is pretty much required in this. Especially Alex, coming back to the point that acquisitions are very much a possibility in these businesses, in SaaS businesses, and any founder would love to keep that option available to themselves, right? And to ensure that transaction goes through, due diligence will definitely come to you, and tax due diligence is definitely one thing. After your valuation and everything is done, and let's say your compliance checks are not complete, the other party is going to generally account for what are the risks, what are the maximum risk for all those transactions where you have not filed all the forms, or you have not properly filled all the compliances, right? And if a tax authority comes back in future, because they can, if they come back in future asking questions about those, what is the cost that is going to be on the new party? They are probably going to discount that cost today from your payout at the time of acquisition. So, and these costs could be really, really significant. We are doing like tens of and hundreds of payment every month to foreign parties in terms of different SaaS services. And every transaction has certain compliance requirement. So I think that's generally my view that.
Yeah, no, absolutely. I think that's kind of a very kind of prudent approach. And as we said in the beginning, it's all about kind of future-proofing your business and kind of being ready for any potential outcome at the end of it. So I think we kind of covered quite a lot of ground, talking about some of the requirements, some of the friction, and equally, like, how do you kind of deal with that? How do you actually remain compliant and without kind of overburdening yourself unnecessarily, but also kind of being prudent in your approach? We touched upon obviously the tax. We touched upon foreign exchange regulations and the general kind of notion of what may potentially kind of happen if you're not compliant. So we wanted to also kind of talk about the best practices in those kind of foreign payments that are so kind of essential to run your business. And as you know, we at Epsi, we've been kind of providing the service of Shopify Ads, which is basically kind of buying Shopify Ads on behalf of developers and then kind of selling it on to them. We kind of had to kind of construct a bit of a kind of accounting method internally to be able to do that. But we very much sort of, like kind of the notion of helping people, get their kind of Shopify ads up and running. But also, quite a few of you guys and some other people came to us and said, hey, I'm kind of having issues with Heroku. I'm having issues with this other DevOps software where they just wouldn't really accept any kind of for India issued cards without kind of telling it anywhere on the website, but just by trial and error, we recognize that none of our cards would be accepted. And therefore, what we're currently looking into is actually kind of building a more of a robust solution where we can kind of potentially create like a stack of our services, where it's marketing, DevOps, RevOps, what have you, and essentially kind of allow Shopify developers and other developers in India to buy that kind of via us and actually have it all kind of up and running on a recurring basis without sort of any unnecessary friction. I mean, and there are a couple of other kind of elements I wanted to highlight. One of them is obviously how many people are currently using our service. It's by paying via Stripe, which we all know is a costly solution because Stripe takes quite a hefty cut. And what's not that many people I think are fully aware of is that you can actually substitute Stripe by making a direct bank transfer from your kind of business account to our business account. And we've done it actually quite a few times now with a few people, and that seems to work. Yes, it's actually worth kind of checking with your accountant and making sure that you've got all the paperwork ready for that, and you can easily kind of explain and have it all recorded. But yes, it's definitely possible, and that's going to cut down your costs tremendously. So rather than kind of using Stripe, you can actually go ahead and just do it via direct bank transfer. Look, we probably kind of touched upon most of the subjects we wanted to, and we'd like to kind of open the floor for questions and answers. Look, Shashank and Mukesh, probably I'm going to ask you guys if there is anything else you'd like to add, first of all, and then we'll kind of turn it to Q&A and open the floor for the questions.
Nothing from my side. What we can do is we've in the past written a very detailed article on Shopify related implications. Maybe I can share with you, Alex, and if you think that's relevant, you can share it with the audience as well.
Yeah, absolutely. Let's do that. When we're going to post the recording of the webinar, we can also kind of append that kind of link to the blog post of yours as well. Thank you. Thanks, Mukesh.
Yeah, I think we can jump to the Q&A.
Cool. Good stuff. Thanks, guys. Yeah, any questions from anyone? Please feel free to unmute your microphone and go ahead and ask the question.
Hey, Alex.
You should be
Abhishek
able
this
to.
side.
Hi, Abhishek.
Hey, man. So, yeah, we are actually taking that the couple of services that we spoke about, right? That Shopify ads, as well as I think you and me spoke a couple of weeks back related to one of the services on not accepting the Indian card, right? Apart from that,
Yeah.
some of my friends actually do freelancing, right? The usual problem they run into it, they are not working on Shopify, so it's more like they are using this Fiverr and all third-party applications. There they can do that subscription or charge by an hour, but the problem with those application is the commission is huge. It's about 20%, right? So is there any solution that you guys are thinking of building where I can take a payment from a merchant, right, as being an independent freelancer, right, by not paying a huge commission? Stripe has that solution, right? You can have a subscription payments over there, but the problem is your business has to be registered. These are independent developers. They don't want to register the business in GST and then do it, right? It's more like if I can just put my account details and directly I can get the funds in my account on month-to-month basis, right? Some sort of selling the subscription product directly linked with my account, not no GST and all that stuff is involved over there.
Yeah, thanks, Abhishek. I mean, that's a good question. I'll probably kind of let Shashank and Mukesh comment on that as well. I mean, right now we're not kind of building any solution for this kind of particular use case, but we are kind of fully aware of the challenges that people are experiencing when freelancing on both sides of it. What you mentioned in terms of kind of actually being able to accept the payments without the hefty commission of the platform, and equally on the other side, when you need to actually send the payments and make sure that you can actually purchase the services you need to complete the task for kind of the larger vendor you're kind of performing it for. There are kind of also frictions and challenges on that part. And I think as we discussed before, Stripe is indeed kind of trying to provide a service, but ultimately it is also not without the flaw. And they kind of admit in their documentation that unfortunately there's no way they can completely eliminate the friction. And chances are that even if you set up this recurring pattern, some of those recurring payments may potentially fail. And as we also know by dealing with multiple ARM developers, when they come to charge their cards in the issued cards or on Stripe in order to kind of top up their balance with Shopify Ads service, many times the cards actually fail. So it's a repetitive process of trying maybe 3, 4, 5 times before it finally goes through. I mean, Shashank, Mukesh, what is your kind of view on this question? Do you have any ideas and sort of?
I'll just add one point, and then probably Mukesh will be better to answer that. Is that Abhishek? I understand that when you are looking at it from a solution point of view, you feel that it should be very straightforward and easy, and why there is a business setup requirement from Stripe, and probably an alternate platform may not require a business setup and GST registration, etc. However, what you should first check whether the GST is really required, irrespective of the platform. Is GST really required? I feel GST will be required in this case because you will have to file a reverse charge GST. And for example, if that happens, then the GST law says that you have to take registration even if you are doing a 1 rupee transaction. If and I mean, Mukesh can confirm this, but if that is the case, then forget about whether Stripe is asking you to register a business or not. You are bound by the law to take a GST registration. And I'm always an advocate of going through the compliances and doing the compliance. These are all costs of running business. You cannot avoid that. What do you, Mukesh? What's your view?
Shashank, I mean, one thing is before even looking at reverse charge, right? One important principle which generally get missed out is, as you see the GST law, the 20 lakhs limit is applicable only if you do a domestic business. That also only see local state business. For example, if I'm in Chennai, I render services to, let's say, an IGST, that 20 lakhs limit do not apply. Same way in a zero rated, even if I have a single billing which I need to make to Shopify, and that's like $1,000, I need to any which way get registered and get the LUT for export. So what I'm saying is, anyway, my requirement to get GST get registered, even if I have a single foreign customer, forget about I'm using freelancer or not. My obligation comes in much before. So thereafter, if I make payment to any freelancer, I'm obliged to do the reverse charge GST and pay it off. So my GST registration does not trigger because of this freelancer, but because of other parameter. Like if I do a single export business, it might be even just worth $1,000. I don't get the exemption limit of 20 lakh rupees. I need to get registered GST on day one and then get the LUT so that I'm getting a zero rating from an export standpoint. And then I need to necessarily comply with all these reverse charge mechanism, etc. I'm assuming this freelancer are not located in India, but overseas.
No, he's located in India.
Ah,
He's
so
located
then,
in India. His merchants are sitting in US. Yeah.
so you are saying that the freelancer are located in India.
Yeah.
Then why do you need to make payment through okay, you are saying you don't do the freelancer directly. There are aggregator apps in overseas.
Mukesh said, no, his situation is that there is a freelancer in India who is trying to accept payment from US client. As simple as that. That's it. And in that case,
To answer the question, if I'm looking from a freelancer standpoint,
Yeah.
then because it's a single, even if I do a single billing of $1 to the export, I need to get GST registration and do the compliances.
Oh,
Exactly.
yeah.
And
Yeah, that's
I'll
what I
tell
was
you,
worried about.
practically people are not doing. But
Yeah.
today, if you see, the Indian government has become very, very robust and smarter. They actually reconcile your income tax when you file the return and when you disclose the income. These
Mhm.
days, they actually do a back-end matching between income tax to GST, even with several other areas. So people have started getting notices on this.
Oh. Okay. Thanks,
Cool.
man. Thank you guys for the inputs.
I'm
Thanks,
sorry.
Abhishek, for your question. Sorry, go ahead.
I'm sorry. Just to be clear, I mean, you're clear, but still, as a freelancer, even if I bill a single invoice to an international client out of India, I need to register for GST, right? Is that so?
Yes, yes.
The 20 lakh limit does not apply to.
Does not apply. And if you need to get the zero rating benefit, which is 0% GST, then you need to also get a letter of undertaking. That's a very simple process. GST registration, you need to make an application that you will do export business, but you will get immediately within 1 day, you get a LUT, letter of undertaking. That needs to be done on a renewal basis on a year on year. If you don't have that LUT, then you are supposed to export, because those export condition, one of the condition is you need to have a LUT.
Okay, understood. Thank you.
No worries. Thank you for the question. Any other questions from anyone? Yeah, sounds like no other questions. I think we're going to stop.